AJ Brown here, and this video post is inspired by an Instagram post I saw maybe yesterday. It was an ad for, I guess, a new lender on the block. They were saying something about bring your 580 credit score here and you can buy a house. Now, if you are not part of the lending game, you would think that's magical. You would think it would be a scam. You would think that it would be something that's impossible, and it's not. I've been in the lending game since, I guess, 2001. I've been here when the market was low, when it was mid-grade, high, super high, and when it was brought to its knees. So a broker or a lender saying, hey, we have loan programs with a 580 credit score, you could still buy a home. That's not impossible. And, you know, besides that, what really got me to want to do this video is I need to break some shit down for you guys, because evidently over the last 20 years, people haven't learned shit. It's real simple. Here's what it is. They got my, they got my panties in a bunch, if I can say that, or what really grinds my gears. The responses on this guy, company, whoever it is, post was something like, "Oh, don't trust it. Don't get don't get involved with these deals without knowing all of the credit requirements." Or the one that really got me was like people saying, not that it's a scam, but people saying, come to me and get your credit fixed and you could buy a house. Or I know this girl or this guy and they're great and all that shit. The bottom line is that got me really hot is the people didn't understand what the hell's going on. I had another guy say on the post, hey, listen, that's how we got in trouble the first time. Time out. Flag on the play. That is not how the hell we got in trouble the first time. That is not how we had the first mortgage meltdown. Because with a 580 credit score, you're going to still be required to put a down payment. Now, the people who are on there responding, talking about getting your credit fixed and come to them or their friend or whatever, that's fine and all that. But I'm at an adverse position when it comes to that, because even if you were to go to someone who can magically make your credit score a 700 or an 800, I'm one of those people that can do that. It still doesn't mean that you are a qualified borrower, because the systems that they have in place is to help with the checks and balances against the consumer from against the lenders. The consumers must have some type of financial education where they understand that even though you have a 680, a 750, or 800, and you can sign for a Learjet, does not mean that you do so. And you have to have, if you don't have the long years of history of building that credit, you try to do that instantaneous magical solution, which they're out there. I know about them. Okay, but it doesn't mean that you're qualified to borrow money from an institution, no matter how you feel about the institution, no matter how you feel about the system, the lending system. The lending system in the United States of America is the only one we got. And we as consumers and those that are within the system and outside must do everything we can to protect it, because you already can see that sometimes folks on Capitol Hill won't do what is necessary to protect it, period. So we have to be vigilant in our usage of this system. We have to protect it at all costs, because when it breaks down, you see what happens. It'll be hard for you to borrow money. It's hard for you to make moves. It's hard for you to get lenders to get on your side. So anyway, with the scoring system, you still have to, you need to have the experience of managing credit, okay? If you do not know how to manage credit because you didn't do the work, in other words, you didn't spend 5 years, 10 years, 15 years building your credit profile up, okay? You'll need to have a system in place to help you with your own personal checks and balances. Now, I'll tell you what, I'll give you the game for free. So that way you can never say no one ever tried to help you. No one ever tried to teach you how this goes. So it's real simple, guys. All right. Just so that you know, and here's my response on that post. I told them, I said, well, with a 580 credit score and them lending you money does not mean we're going back to what it was that helped us get to the mortgage debacle. What helped to get us to the mortgage debacle was when they were doing the 100% financing, 80-20s, or one loan 100% financing, okay, or 70-30s, and all you needed was a 660, 680 middle credit score, and you were getting that money. Yeah, it cost you a lot of money and interest to get it. It could be, at one time it was like from 6%, excuse me, on the 80% loan to a 9% on the second. Sometimes it was like that. Okay, that blended rate was maybe 7.5% for 100% finance. Then you had the Alt-A lending parameters, which basically meant that instead of that 80% being at 6%, you probably got it at 7 1/4, 7 1/8, or something like that, maybe 8 1/8, and then that second, which was 20% of the 100%, that could go anywhere from 11 to 13 1/8%. Okay, but they did these loans without checking your income, and that's how we got into the mortgage meltdown. That's what was the beginning of the end. When they allowed people to get in, not just with no down payment, but when they took the handcuffs of the ratio restrictions off. So now you got people who work at fucking McDonald's buying $1 million mansion because they had a 750 credit score. Okay, that's what helped us lose our footing when it came to mortgage-backed securities. And a lot of people who, and I take nothing away from people who had 750s, 700s, 680s, or 800s, and they couldn't prove their income, but they were good credit risk. I'm not talking about you guys. I'm talking about, you know what I'm talking about. You guys and ladies that was out there that was just trying to, you know, you was doing your deals and all that kind of stuff, and you was getting money and all that. And you knew you weren't going to take care of that mortgage or that house. You knew it. You were just doing a deal. And that's where the problem came in. That's where all the little shadowy figures start sneaking in the back and start screwing up our system. So with lenders that are out there that saying, hey, bring your 580 credit score, challenge credit, whatever, to us, and we can look at getting you a loan. Let me tell you something. It's not free. There's no money down. That's not the scenario. You're gonna have to put. You got limited solutions. You got Fannie Mae and this style of lending, which means it's 5% down or higher to do a deal, plus your closing costs. Then you got FHA. FHA is going to be 3.5% down on the top end, plus your closing costs. Okay, that could be up to 6%. And then you have VA. Okay, VA is only for veterans. You got to have your DD-214s, and those who are in military, ex-military, understand what I'm talking about. If you do not understand what I'm talking about, I'm not talking to you. You got to have your DD-214s. Once you have those, you take them to your lender. Now, you're still going to have income qualification. Okay, they're going to make sure that you do qualify, but you're also going to have your credit score is going to have to be a minimum of 620. Okay, but for those guys and ladies who serve in the military, they don't have to put any money down, and they don't have to put and there's no closing cost fees assessed to that, and that's for them. All right, and that's the government program for them. I think people in the military should get free houses, and a car, but I'm not the president. So anyway, that's how that works with getting a loan. Now, early in my videos, I'm going to give you guys the game. Okay. Hope you guys not just watching this stuff for entertainment. You get a paper and pen, pause this video, get a paper and pen, I'm going to give you the game. And I'm not waiting, I'm just going to give it to you. If you miss it, you can always stop and rewind back. Okay, so lenders have ratios. They got front-end ratios, back-end ratios. The front-end ratios is going to be all-inclusive of the principal, interest, taxes, and insurance. Principal and interest is basically what the amount of the house or vehicle that you're purchasing, plus the interest on that. The interest is what goes into the banker's pocket for lending you the money. In all loans, you got to understand this too. When you're making a payback on a loan, the way how it's set up, majority of the money that you're paying every month goes into the lender's pocket. It goes into the lender's pocket first. And a little bit will go towards principal balance. Once you get past the halfway mark, or a little over the halfway mark, then if you're watching your payment sheet, you'll see where you'll start paying off your mortgage faster, or more of the money is being applied to the principal, because there's only so much interest that legally that a lender can have yearly, and also over the course of the life of that contract. Now, the other part of the pity is the taxes and insurance. Now, your lender does not have any control over taxes and insurance. Sometimes when you have your mortgage and which is the principal and interest plus the tax and insurance roll into one payment, sometimes depending on where you live, you'll see either every year or something that either your mortgage goes up or it goes down. Well, that's because of what your taxes and or insurance costs. Because if you get a fixed rate mortgage, that doesn't change. That doesn't change. That's it. Once you locked in for 30 years, that's it. But if you notice the payment going up or down, that's because your taxes or insurance that's being collected into your escrow account is either empty and it has to be refilled, and the taxes may have went up by $100 extra that month, or the insurance could have gone up by $100 that month or more, or it has been reduced by that much or more. Okay, so you have to look into your paperwork to understand exactly where you're at with that. But going back to what I'm telling you, PITI. Now, with the lenders, you're going to probably have to fall in between a 29 and 32% of your income. Okay, so for example, if you are a person that makes $100,000 a year, and the broker or the lender wants to calculate your mortgage payment that you could the max you could qualify for, that would be 29 to 32% of your income. 29 to 32% of your income, which means if you're 100,000 there a year, 29,000 to 32,000 of that could help you qualify for a mortgage. And you have to have someone with you to help you factor in what it would cost, what the equivalent of 29 to 32,000 at a particular interest rate, how much that is mortgage altogether. That could be a $30,000 a year mortgage, could be, excuse me, a $300,000 mortgage, or it could be a $400,000 mortgage. It just depends on the interest in the loan program. Now the other ratio is called the back-end ratio. The back-end ratio is your PITI plus all of your revolving debt. Child support is also included in that ratio. So if you have child support, you want to be careful of that. That's broken down into a monthly payment. That monthly payment is added into your entire debt scenario. Okay, which means usually they don't want you going over 40 to 45 to 50% of your amount of your income, okay, for the year. Which means, again, if you're 100,000 there, you're looking at no more than $45,000 and $50,000 can be calculated for qualification for a mortgage payment. That's the top end. Now, like I'm telling you, what's included would be your auto loan, unless you're 10 months out from paying it off. If you're 10 months out for paying off your auto loan, the lender can't ignore it if they choose to, which means that payment don't count against you. But beware, okay? Buyer beware with that, because you don't want to put yourself in a situation to where if you don't calculate for that amount of money, you buy too much house, and then something happens to you, you lose that. You'll be behind the 8 ball times 2. So your auto loan, credit cards, student loans, okay, that's pretty much it. That's all that's calculated into. But if you want to be a little bit more stricter on your qualifications, you can go ahead and calculate in like what your light bill, water bill, and all those other kind of things would be, so that way you don't buy too much house. Okay, so that helps out with that. But you want to be within 29 to 32% of your income. That helps you qualify or understand what you could qualify for with a mortgage, which is PITI, principal, interest, tax, and insurance. And your overall debt would be no more than 45, maybe 50%, 48 in there, 45 to 50%. Okay, and if you're not sure which one you want to go with, you go with 45%, which means if you're $100,000 a year, 45% of your debt that you would want to understand to be able to pay out every month would be no more than $45,000 a year. And that's including PITI, principal, interest, taxes, and insurance. That also includes all debt that you have that you're paying every month. And then you want to include your cell phone bill, you want to include your light bill, your water bill, all that kind of stuff. You include that in there. That helps keep you, the more you include in there, the more realistic your personal loan approval would be. You'll know exactly where you're at. Now, the more debt you put in there, the less amount of house you can purchase. But that's really not the point. You want to make sure you get into a deal that you can afford. So that's how you keep your pants on, guys and girls. Okay, that's how you don't overbuy. And you know, again, I'm gonna harp again on, you know, having somebody try to erase your debt. I mean, that's cool, but you got to get with someone that's going to be honest with you. You got to get with somebody that's going to tell you, okay, well, even though we got all this stuff legally taken off and we're putting some stuff on there legally to get you over a certain kind of score, you're manipulating the system, but you need to have the experience. You need to have the know-how on how to take care of your finances. And there's more to it than just what I'm telling you right now. So, you guys, ladies, y'all, I hope you take heed to my warning. I hope that if you have any questions, you can inbox me. You can talk to me about it. You know, hashtag Team BMS, hashtag Boss Dads, man. And we're here to help the community all across the United States. All right. Well, hopefully this video helps somebody out there, because after looking at those responses, I'm really disappointed in the American people, man. We're so far behind. It's ridiculous. It's ridiculous. All right. So good luck to you. Bye.